It's a great pleasure and delight for me to be chairing the panel, the last panel of the day, last but not least, and it's a real pleasure. We have, as you can see yourself, 4 distinguished panelists that really do not require any introduction in the capacity as governors of the respective central banks. Let me just introduce them, and I'll say a little bit more afterwards. So with me on the stage, it's a great pleasure to have here Governor Kazuo Ueda from the Bank of Japan. Thank you very much for joining today's panel. We have President Christine Lagarde. It's a great pleasure to have you here. I don't need to say President of the ECB. And last, on my left, we have José Luis Escrivá, newly appointed Governor of the Bank of Spain, for you too. It's a great pleasure to have you. We have online François Villeroy de Galhau, Gouverneur de la Banque de France, who I have to say, he has here, I want to put him 2 hats directly. He's Gouverneur de la Banque de France, but also the Banque de France is the great supporter, has the Secretariat of the NGFS, the Network of the Greening of the Financial Sector, and I must say, thank you very much for your support in this area. So all of you.
I'm sorry for not being with you physically this afternoon.
François will make sure that we will not even notice that you're not here with us physically, I am sure. Look, each of our panelists are uniquely positioned to tell us a little bit how they see the challenges of climate change and what it means for their mandate of monetary stability. I also want to take this opportunity, because we are here to have these central banks here, and to really add that all of them have been particular supporters of the Green Swan Conference, either because they're co-hosting today's event or because they have co-hosted previous events with us. So I do want to take this opportunity to not only thank our panelists, whom we will hear, but also the teams behind the scene who have been tremendous job to help us organize today's event. So thank you very much. So I come to the last panel. The last panel is often a time for reflection, for also trying to look not only backward, but also forward. So we have heard today, right, climate change, it's both about physical risk, the risk of more frequent, and this is something that we're likely to see, more frequent, more regular, more persistent risks, but also transitions risk. The risk created from moving to brown to green, the transition risk that come with it. When these risks materialize in economics, we talk about adverse supply shocks. The interesting thing is and Sabine, you mentioned it in your introductory remark, until the COVID crisis, until the recent inflationary episode that we have had, central banks used to look through adverse supply shocks. Today, it is not clear that central banks will have the same approach, or at least they will take great care before taking the decision to what extent you can look through, i.e. adjust or accept a certain amount of inflation volatility due to such supply shocks. So the question we're going to be asking here today is, first, how do we think about these supply shocks coming from climate risk? How do they affect the economy? And second, what does it mean from a central banking perspective in terms of the mandate? So we're going to organize it in 2 rounds, exactly those rounds, one about the economic impact, and the second, what does it mean from a monetary policy perspective? So let me go directly into the question about how do central banks think about the importance of, on the one hand, physical risk versus risk due to the transition. And how do you think about the trade-off between the two, and what are the most notable economic impacts? Governor Ueda, can I ask you to tell us a little bit about Japan's transition strategy, given the prominence of certain hard-to-abate sectors that you have in Japan? We've heard one of them. It was wonderful to have someone on our panel earlier this morning. And what are the macroeconomic impact of this transition in Japan?
Yes, certainly. I feel a bit uneasy today because I know very little about climate change's physical risks, except that I know that summer is getting hotter and hotter. Also, I didn't write or craft this Japan's transition strategy myself. It's the government who wrote it. But I felt a bit relieved to hear what was discussed in the previous session, because that's fairly related to what I'm going to talk about. So Japan's transition strategy is composed or will come in 2 stages. In the first stage, we will pay a lot of subsidies to green investment. In the second stage, we'll slowly phase in carbon pricing. Now, the justification is the usual one. That is the existence of hard-to-abate industries, adjustment costs needed for resource reallocations from the brown to green sectors, backlash from the sectors incurring more tax burdens, and time and costs needed for developing green technology. Now, more specifically, for Japan, the share of hard-to-abate industries, such as steel and chemicals, without fully established green technologies, is still fairly high compared with those in other countries. Furthermore, we still have to rely on fossil fuel power generation, including coal-fired plants, as an important source of electricity supply, given Japan's geographic features such as the lack of interconnected line, limited shallow seas, and limited flat land areas excluding forests. Also, the earthquake we had back in the early 2010s had a lot to do with the continued use of coal. Japan's government has designed its green transition strategy, taking into account these features carefully, as I said. Specifically, in the first phase, the government is going to provide fiscal support to firms making investment for green transition. This will amount to about 20 trillion yen in total, which is about 3% of GDP over the next 10 years, and will be funded by issuance of Japan climate transition bonds. In the second phase, the government plans to introduce carbon pricing gradually for the purpose of scaling down economic activities in the brown sector. This approach intends to minimize economic and social costs of transitory transition, and thereby making it smooth and orderly by sequencing fiscal support and carbon pricing in a cautious manner. According to government's estimate, Japan will need to spend over 150 trillion yen in investment in green transition over the next 10 years to achieve carbon neutrality. In this regard, the 20 trillion yen fiscal support I just talked about will help achieve the target if various indirect effects of the subsidies are taken into consideration. Japan climate transition bonds will be repaid with the proceeds from carbon pricing. Carbon pricing will be introduced at a lower level initially and will be raised in a phased manner gradually. Specifically, Japan's government plans to implement both quantity control and price control. As quantity control tools, the government will operate full-fledged emissions trading systems in fiscal 2026 and launch rationing of emission allowance for power generation companies in fiscal 2033. As price control, the government will begin to impose surcharges on fossil fuel supply in fiscal 2028. Now, the impact of green transition on the Japanese economy is likely to differ depending on the stage. In the first stage, that is before carbon pricing, fiscal support will increase capital and R&D investment for green transition, putting upward pressure on the real interest rate. Indeed, a survey result shows that a significant number of firms might replace obsolete production equipments with new ones for the purpose of promoting green transition. Firms in the brown sector will decrease investments, expecting their capital stock to turn to stranded assets due to the prospective introduction of carbon pricing and the resulting deterioration of their profitability. However, increases in investment for green transition will more than compensate for such negative impacts, boosting Japan's economy as a whole. In the second stage, that is after the full implementation of carbon pricing, supply constraints caused by quantity control will act as a temporary negative supply shock to the economy, triggering an increase in inflation and a decline in economic activity. Also, carbon taxes will raise fossil fuel prices, leading to a decline in aggregate demand with spikes in headline inflation. In the longer run, however, such negative impacts of carbon pricing will be alleviated as the economic activities in the brown sector continue to shrink. I guess I'll stop here.
Thank you so much. I mean, that is really quite an ambitious program, and it's also interesting, and I'm sure we'll come back to it, to have climate transition bonds that are financed by the carbon pricing and the impact that you have both on the short term and the long term. Thank you very much, Governor. Let me maybe directly turn to Governor José Luis Escrivá. First of all, I think our thoughts are all with you and all the people who have been affected by the recent event in Valencia, which is really exactly a climate shock. So what can you tell us about the impact of climate shock? How do you see it more broadly on the economy?
First of all, thank you very much for the invitation to this panel, to this policy panel, to you, the BIS, also to the network. Before anything, I should say that these tragic events in my country, in Spain, should serve as a stark reminder of the formidable power of nature, which we frequently underestimate at our own risk, actually. I mean, the economic consequences, I will focus maybe, although I may have a more general perspective, it might help you to use this particular event, which is actually ongoing in Spain, to put color to the way we are operating. And the economic consequences are substantial. It affects nearly 1 million people, and a very large portion of the physical productive capital of an economic area representing about 2% of the Spanish GDP is probably very much destroyed. That's the impact. And science, climate science is telling us that unfortunately these kind of events will become more frequent over time. In this particular case, I mean, this results from in record hot water in the Mediterranean for this period of the year. This gave rise to evaporation, unprecedented evaporation, and in turn resulted in this extreme rainfall in Valencia, and followed by these devastating floods. And science is also telling us, the climate models, that this is structural and this is resulted from a global, increase in the Earth's global temperatures. So we need to be prepared to have to deal with more of this and larger shocks and more frequent. At the Bank of Spain and in other central banks and other institutions, we are devoting increasingly resources to this kind of, to be prepared in terms of data gathering, in terms of analytical tools to deal with this issue. And actually, in this particular occasion, we are already benefiting somewhat from these models. Not only, I mean, I'm talking in real time. I mean, these days, not only in helping or providing inputs to the government in designing a targeted response to the consequences of this flood, but also certainly for ourselves. In the domain of central banking and more general, I would say, for regulators and financial supervisors, no doubt we are already doing that. And this helps us to not only to monitor the situation in real time, but also to be able to design certain measures, both at the macro and micro level. And I would say that what is proving extremely important is the capacity we may have for the real-time monitoring of a disaster of this kind. And for that, you need high-frequency data, extremely granular data. Fortunately enough, at the Bank of Spain, we have such a data because we have individual data for the credit exposure of all individuals and all firms, and we can immediately aggregate it as we need it in the first case in order to see the exposure of the institutions in the footprint of the disaster, and we are doing so. But also in order to be able to be targeted, because the aid package of the government is also selective, and we need to know exactly what are the SMEs affected, which have a particular aid support, individuals, mortgages. Think for a moment, there are in the footprint, there are around 500,000 people with mortgages, 23 enterprises, 90% of them are really small. But while now we have a very clear view of the exposure in real time, over the next few weeks, it would be crucial to be able to combine our data with data from others, for instance, for insurance companies, because at the end of the day, what we need to know as much as possible over time is first how we move from exposure to actual losses, and how these losses are distributed between what losses are we taking by government because of the effectiveness of the package of the aid, which one will be taken by insurance companies, which ones will be taken by financial institutions, will be cautioned by financial institutions, and finally the impact on firms and individuals. I mean, to the extent that we can be able to track all this over the next few weeks, I think we will be more efficient in redesigning our policies and responses, and also to taking the necessary prudential measures at the micro and micro level. And a point on something that is very fundamental to us, to central banks, that proved very relevant in the first days, which is the continuity of payments and in particular of cash. And the fact that we had a fully fledged branch in Valencia very close to the footprint allow us to respond very rapidly and to provide certainty to those affected in different ways, provision of cash, but also deteriorated banknotes will be replaced with, particular standards in this case. In a situation of crisis like this one, I think it's very important that all public administration, from their own perspectives, take the view that to the extent that they can remove certain uncertainties, it will be the best contribution from them, actually to something which is very important beyond, moral considerations, which is basically a faster recovery of the area. This is the approach we have taken. By saying this, I'm really moving from the script that I had implied to explain a number of things we are doing in the research at the Bank of Spain on this issue, which I think are very relevant and are relevant, I would say, in just one word to finalize these preliminary words. Are very important some of the pieces of research that we have been conducting in trying to understand the change of conduct of financial intermediaries resulting from climate change. And that's something we need to understand better looking forward. And not only in terms of the reaction to this volatility and extreme shock, but also to more structural changes coming from desertation, aridity, and the fact that there are certain areas that are more exposed to climate change, and we have to monitor very closely how financial intermediaries behave themselves in these areas. I will stop here for a moment.
We'll come back to many of the issues you touched upon. I do think you brought out two very important points, among others. Right, you do need good analysis, and we'll talk more about also what you do, good models, but in the end you need good data. And particularly in that, I found interesting interconnecting different institutions and what does it mean to understand the losses. The other point that I thought was really interesting, we're in the building where we do a lot on payments. All central banks do a lot on payments. And I'm sure many of you have always been asked, but why do central banks do so much and focus on payments? Because it is at the core of trust in money and exactly in crisis. So thank you for raising this point, which is clearly highly relevant here. Let me maybe shift a little bit gear. And so when we think about the economic impact of climate shocks, of climate change, it never happens in a vacuum. There's also broader context. And maybe that's why I would like to ask you, President Christine Lagarde, climate shocks or supply shocks happen often at the time when many other things change, whether it's demographic, we've talked about technological innovation, geopolitics. How do you think that climate-related supply shock affect more broadly or happen in a world which is tends to be increasingly supply constrained?
Thank you so much, Andrea. Thank you, and please call me Christine. It will be easier in that community of interest here. Before I get to your question, do you mind if I ask one question to my colleague and friend Kazuo, and then he has time to think about it, because I don't want to put him under pressure. But yeah. I was fascinated by what you described, this sort of circular principle of the bond issuance, the reimbursement through the carbon pricing. And my question is, number one, what is the time horizon of that? And number two, against what objectives do you set your plans? Are you using the Paris Agreement? Are you using something else? Do you include nature in that, or is it just climate? So you see, and you really arose my interest.
Yeah, he did.
And you can think about it. And if also you allow me on José Luis, I would really like to commend you for your reactivity, for the way in which you've responded to the crisis. I've heard it secondhand from multiple interested parties, and it's just spectacular. the ability to deliver cash almost at the doorstep of people who are suffering is not something that comes to mind as, the analytical work by multiple researchers. It's just getting your hands dirty and making sure that people have what they need, not to be totally uncertain and anxious about their future. And by the way, it led me to think about our digital euro. Because, no, seriously.
Yeah, absolutely.
Because, you have this anxiety of people in some of Europe about, why are you going there? Because we still want to hang on to our cash. And eventually we say, you will hang on to your cash, but secretly some others say, well, for a period of time. And then you think about the offline application of your digital euro, thumb up, yes, but then you also think about power. If you don't have power, you had power outage for what, 4 days, 5 days? Now, of course, by that time, your cell phone has run out of battery. So, there are lots of little practical details that we need to keep in mind and that have nothing to do probably with very, very elaborate and sophisticated economic research. But it matters because we provide public service and that's part of it. So, and I want to echo what you said to you, José Luis, and if you can convey that to your compatriots, and I know that many central banks around, certainly the Governing Council of the Euro system are supporting you and your colleagues. So, what I would like to maybe identify is the interconnection between climate change consequences, nature damages, and number one, demographics. Number two, digitalization and technologies, and number three, geopolitics. So I think all of that, there are interactions between these three. When you look, for instance, at demographics, we are roughly 8 billion at the moment. Based on most projections, we will have another 2 billion people joining us, and we will hit the double digit in 2050, thereabout. And there will, as a result, inevitably be consequences in terms of where people live and where climate change or nature degradation hurts. And there is a very good Nature study, the publication, which finds that climate change will likely cause a shift, a profound shift in Earth's tropical rain belt. Now you might say, okay, so what? Well, the rain belt, if you look at where it impacts, it's exactly where there is significant population now, but where there will be more population even tomorrow, and where the impact on water in particular is going to be phenomenal. Now, if you combine that with the fact that some people simply will not be able to live in certain places, either because of shortage of water or because of sea level rise to the extent that they simply cannot live where they used to live, we have to think about what impact it will have in terms of migration. So you bring demographics increases plus climate change impact and nature degradation impact, and the two of them combined together will lead to climate migration. I hate to mention a number because you have everything ranging from 20 million to 1 billion. I kid you not, that's the range. If you look at what the UN Migration Agency, if you look at some studies which have been conducted, there's one which actually says precisely 62 million working age climate migrants over this century, which I find very, very much on the minimal front. If you consider that today there are already 65 million migrants caused by a combination of wars and climate change. But that's a study by Brzezinski back in 2021, and things have certainly not improved in the meantime. But there will be such migration from those areas that are most affected by climate change and those areas that are alleged to be less affected. And if you take it one step further, assuming we have those migrations, it is probably also going to further antagonize and further exacerbate the political tensions that in some countries already exist as a result of migration. I need not to move very far away, not even across the pond. There are places where already it's a very acute debate and where the tensions are very strong. So that's the intersection, if you will, between climate change and demographic development. The second one that I want to touch on has to do with digitalization and new technologies. And the benefit and the risk here is that an increase in climate-related shocks may certainly divert resources away from innovation. Why is that? Well, because the innovation is going to require significant amount of resources. Now I'll come to the kind of resources that I'm thinking about here. Added to which, if you look at the development of artificial intelligence as it develops now and will continue to develop, it will be a very high consumption of energy and certainly a high consumption of water as well. And we know a bit less about the consumption of water and the footprint that it leaves. But so the green transition is sparking game-changing tech. It does, and it moves technology, and it should. Smart grids, self-driving vehicles, electric vehicles of all sorts, development of hydrogens of all colors and varieties. But all of that is all and well, and the further development that will take place, in particular in relation to grid stabilization and grid interconnections, will be critically important in order to be able to consume some of the energy that is produced in some corners and cannot travel to other corners. And we have examples most recently of that volume of energy wasted simply because it doesn't travel and the grid does not connect with the others. But at the same time, that climate change, as I said, divert capital towards less productive, less increasingly needed adaptation strategies. If you think about, for instance, of the sea walls that are being considered and built in some corners in order to limit the rise of sea level and the impact that it has on low-level lands, or if you think of the development of air conditioning, as simple as that, which is needed in some corners but is totally counterintuitive in terms of actual innovation, yet it does absorb a lot of resources in order to protect against extreme events. And that strains our capacity to innovate in something that would be far more valuable for longer term rather than to fix the short term, because we've been a bit too slow to start this matter. And last point that I was alluding to as well is the energy intensity of digitalization and AI, which certainly may hinder our climate goals. In 2023, the Google, and I'm not picking on Google on purpose, it's just that that statistic is available and published by Google. So Google greenhouse gas emissions were almost 50% higher than its consumption and its emissions in 2019 due to energy demand from what?
Data centers.
Data centers, absolutely. If you ask all the big venture capitalists at the moment where they want to invest, they'll say data center. And if you push them just a little bit further, they'll say maybe small nuclear power plant in order to actually feed enough power to those data centers. So that's the third one. So then I want to take us one step further, and it's going to combine some of the elements that I have just mentioned, and that's the intersection between climate change and geopolitics. Because it will have a dynamic of its own. And it will be induced by nature, by the rarity, scarcity of certain resources, and by the impact of climate change. Think for a second about China and the complex relationship between that country and other countries in the world. Think about the combination of rare earth and other specific minerals that are available predominantly in China and not the rest of the world. Think about graphite. Think about tungsten, for instance. Well, most of that is actually located in China. Many of those are essential for the green transition. That will have geopolitical impact, and that should be taken into consideration in the redefinition of whatever relationship some have with that country. Climate change can also disrupt a traditional supply chain. If you look at the Panama Canal, for instance, and how about 40% of the traffic has been impaired as a result of the lower level of sea that is available in the water canal, which has prevented some of the deepest cargoes and other tankers from crossing that canal. It is transforming international shipping routes. And it might weaken some. If you think of Russia's control over the trade route through the Arctic, for instance, it will be a change. But at the same time, if you look carefully, as my great team has, if you look at the Russia 2020 National Action Plan, which is for 5 years, if I recall, it aims, and I will quote, to use the advantages, note, of climate change. According to one estimate, over half of Siberia's permafrost may melt by 2080, potentially, and that's again in the action plan of Russia, potentially turning into agricultural land. Now, most of you know as well what the consequences of the melting of permafrost will result in. Methane, massive emission, which is far worse than CO2 pure emission. So, climate change is, has its own character, but it does have a massive impact on other critical areas, and I've tried to demonstrate that. And I think that we could take it one step further and bring the three together in a little cocktail that could either be good or bad, but I will stop here.
Thank you so much, Christine. It reminded me this morning we had a wonderful panel also showing the interconnectedness between international trade and climate. And now you really drew very clearly the interconnectedness, not always in a positive way, between technology and innovation and climate. It needs innovation, and yet energy and intensive innovation can really make it very difficult. So Christine, you really already brought us into not only broader context, but global context. But let me now turn to François. And here I will pick a little bit also on your hat from the NGFS, because the NGFS has done some incredibly interesting work recently looking at climate impact from a broader perspective. Can I ask you to bring us some of the key insights we have received from that? You're on mute. Hold on.
Sorry.
Perfect.
Thank you very much, Andrea. Can I first say how much I am impressed by what Kazuo described about the Japanese plan, and obviously by what José Luis described about the Spanish situation, and express my deep solidarity. I agree with everything what Christine has just said. Can I try to answer your question going perhaps a step further on geopolitics, and starting indeed by NGFS work. We have on the one hand an evidence of increasing physical and economic damages due to climate change. Sabine explained it this morning. We expect now GDP losses of around 15% of GDP by 2050. It's 3 or 4 times more than before. And unfortunately, the floods in Spain are an example of that. But on the other hand, let me state the obvious, we are at risk of a decreasing political commitment to fight climate change, especially after the US election. So we will come in the second round about what central banks can do, but let me share perhaps some first thoughts about the global agenda. I don't pretend to commit the whole NGFS, but I think we have at least 3 levels of action which remain and are more important than ever. First, preserve an international coalition. Second, stick to the European calendar. And third, support the private sector. Let me very briefly explain. Preserve an international coalition. And I don't know if I can still speak of the global coalition, but an international coalition. Europe, UK, Japan will remain committed, obviously. Kazuo was very clear. One key question is what about the emerging countries and the poorest countries in the south? It's not only about China. What about India? What about Brazil? What about the poorest countries in Africa? What can we do to keep them on board, to avoid free riders' behaviors, and only self-interest and short-term policies. I think the question of the funding of the transition in the South and of the adaptation cost mentioned by Christine, this question will be more important still than before. And it raises the question of the role of the World Bank and MDBs for the poorest countries and of blended finance for the emerging countries. We should perhaps look cautiously at some prudential rules which discourage a bit too much blended finance for climate. Can I only add on this international coalition that the NGFS was built 7 years ago as a coalition of the willing, and obviously this enthusiasm, this energy we have together will remain and will be very important. I said second, stick to the European calendar. You know the European commitment, EU, is very strong, carbon neutrality by 2050, and a significant increase, minus 55% by 2035. We will hear some voices, let us be honest, to say after the US election we should change this calendar, downgrade our ambition. I think it would be really a mistake. It's a question of predictability for all the economy. It's a question of credibility. That said, we can perhaps simplify somewhat some of the many rules we have. Look at the Draghi report. He calls for a joint plan for decarbonization and competitiveness. If you look at SFDR, CSRD, CS3Ds together, if you look at the various transition plans, it's a bit too complex. By the way, we will look at the famous CBAM, Carbon Border Adjustment Mechanism. If there are issues on trade, and I know they were raised during the conference, some elements of carbon border adjustment mechanisms are perhaps part of the game. We should think about it. So I said preserve an international corporate coalition, sticking to the European calendar. I conclude very briefly with supporting corporate commitment or private commitment. Because corporate cannot be in denial of reality. Whatever the political results will be everywhere, the frequency of hurricanes, floods, look at Spain, will not diminish. And corporates are confronted already through the insurance costs, which are increasing very rapidly. They are confronted to the economic consequences of climate change. So I think it's very important that they remain committed. Transition plans are of the essence. I want really to welcome the work coordinated by ISSB and Emmanuel Faber. I think, again, that it took increased importance due to some political hesitations we will see around the tables. Obviously, the private economy cannot ignore the necessity of adaptation and transition. And I will stop there before coming to monetary policy.
Okay. Thank you very much. Clearly a very ambitious program, but as you say, a program that is needed, that needs to be conducted forward. I think that's a perfect segue, and you made the segue yourself, right? So there's a program, there's leadership is needed, but ultimately a key question is what is the role of central banks? What can central banks do in the mandate of the monetary stability? So let me now go to each of you. And I will, in fact, why don't I start directly with you, François, and ask you, can you tell us a little bit more what kind of work you're doing now at the Banque de France to move forward on these questions and to understand how it can inform in your own decision? What are some of the early insights and what are potential next steps that you see?
Thank you, Andréa. I perhaps react to your sentence saying the key question will be the action by central banks. It's a very important question, but it's not the only one. And we cannot be the only green game in town. It's very important to have public policies and to have, as I said, private investment by corporates on their transition. That said, we are working in the Banque de France to try to figure out the economic consequences of climate change, especially on inflation. And frankly, the jury is still out. And you have several possible scenarios. If you look at two dimensions, first, the mechanical effect of inflation is probably positive because increase of energy costs, for example. But if you look at the output dimension, the effect of climate change could be slightly deflationary. So you can have a panel with 4 parts and combine the 2 dimensions. The most plausible scenario, but it's only a plausibility, is that climate change will be slightly inflationary and slightly restrictive on activity. And we will have to adapt monetary policy. Which leads me to 2 additional reflections, if you allow me. First, it's part of our mandate. Anyway, whatever the formulation is, I know it's a political debate. Some say it's mission creep by the central banks. They shouldn't care about climate change. They shouldn't try to green monetary policy. I really object. Let me take the ECB example, and Christine will probably give more light. We have a primary mandate, as you know, of price stability. And we have secondary mandates about social cohesion, employment, and yes, environment. The secondary mandate can play a role. But let me suppose we have only the primary mandate of price stability. If we ignore the economic consequences of climate change, as I said, on both inflation and output, we miss our duty. So even looking at the core mandate, it's our duty to incorporate climate change in our economic forecast and in our market operations. Second remark is climate change is supply shock. Yes. That said, not all supply shocks are alike. And it's also true for climate change. Is it predictable or is it not? Is it in upstream sectors or in downstream sectors? So we should have a more granular analysis and judgment. But let me take the hypothesis, as I said, that climate change as a whole has more inflationary effects. Probably rather moderate, but more inflationary effects. Should we look through? And you hear voices saying, look, the traditional textbook is that central banks should look through supply shocks and or we should accommodate the inflation target, raise it a bit in order to accommodate the effect of climate change. I don't think so. I don't think so. If we look through, we are at risk of spillovers from energy prices, let me say, to core inflation and disanchoring of inflation expectations. And this increased uncertainty would make the energy transition still more complicated. By the way, still more difficult to fund because we would have risk premia in interest rates. So I think it's very important to keep our inflation target and inflation expectations anchored. We can have, it's a medium-term target. It doesn't mean 2.0% inflation each month. But I see really no reason to look through or to change the inflation target. Perhaps last element, but just to introduce perhaps what Christine will say, I really pay tribute to the ECB under the president's leadership for greening monetary policy and also for greening supervision. If I may, this is a very important axis of work by the NGFS. We have our 2 heads, monetary head, but also supervisory head. The second one is also very necessary to green the financial system. And I stop there.
Thank you very much, François. I think your message is clear. Central banks from your perspective, have really a responsibility to respond to inflation also when it comes from supply shocks, including climate shocks. So yes, I think it's the good time to turn to you, Christine, and ask for your response to what François has said, and more generally, how do you say, we've heard it, there might be more supply shock, more persistent supply shock due to the climate transition. What should be the response from a monetary strategy perspective?
I agree.
Okay. Very good.
No, François put it very well. I have no, no argument to there's no argument to have. I'll try to mention a few things about inflation in particular, because I think that, if there is one thing we have to do, it's to provide this price stability. We have the mandate that François has indicated, 2% medium term sustainably, and we see no reason to change that, but I'll come to that in a second. I would like to bounce back on one point that François finished with, and which is a delicate one, and that's the issue of supervision. So I'm a little bit out of my territory here, and I apologize to the Chinese wall that should exist between central banking activity and supervision activity, which is conducted in Europe by the single supervision mechanism. But it's important because it's also one of the tools that is available for supervisors in order to transmit, we talk about the transmission of monetary policy, but we also have to transmit the sense of risk and urgency and the measures that actually banks that we supervise have to take in order to anticipate the risk. And it's a risk management issue, but it requires that the risk is actually anticipated, is measured, and that it is mitigated. And I'm mentioning that because I know that it's a little controversial, because banks in general do not always have the appetite to embrace wholeheartedly the necessity to measure, anticipate, test their risk mitigation. And it's something that I think we have to ingrain in the culture, because they are the ones that are going to be best able to identify whether such particular loan located in such particular area that is possibly to be flooded because not enough dams have been built over the course of time and the sea might rise is associated with a risk that leads it to either be badly insured or not insured at all, which then raises the issue of how do I provision the risk in my balance sheet. So I think that entire dimension is very practical, doesn't touch on the subtlety of monetary policy, but it's one of the arms that is extremely useful in order to make sure that the risk associated with climate change and with nature degradation is actually taken into account and alleviated to the extent is possible, and that at least the accounts that are provided and that are audited are true to the reality. A couple of things that I would like to mention, which I think evidence that climate-related shocks and the green transition may affect the inflation environment. And I would mention three particular factors. One is it increases inflation uncertainty. Two, it increases inflation volatility. And three, it changes relative prices. So if you look first of all at the uncertainty, our research finds that higher temperature can lead to higher food prices and have as a result varying effects on such prices, but also have varying effects on service inflation. There is research that has been done by the ECB in that respect. So change probably on a permanent basis, unless there is adaptation coming down the tube. Not yet at this point in time, but there will be higher food prices. Second, climate change may also shift consumer behavior. And if you look, for instance, at some surveys and some intention indications that are provided by tourists in particular, there are certain islands of the Mediterranean Sea, which is way too high and has been way too high, where it is anticipated that there will be a decline of about 9% of tourism as a result of climate change. And in the short run, and that was a great example that Kazuo gave, transition policies may affect the prices of production and lead to higher cost of production. So that's for inflation uncertainty. Second aspect is the inflation volatility. And again, our analysis shows that while moderate, that's an interesting one, moderate summer heat waves increase inflation in advanced economies via notably higher food prices, very strong summer heat waves reduce CPI by around 0.6 percentage points after 2 years. And that is via demand effect, negative demand effect. So François is completely right. Jury is still out in many ways. And to draw the conclusion that it is going to be inflationary in the short term and disinflationary in the long term if the transition measures are well taken, maybe. But I would say maybe with great humility because it's really uncertain what the impact will be. For us in the euro area, where we have 20 member states with different exposure to climate change impacts, we should anticipate that it will lead to more divergence between the member states, which will not necessarily make our life much easier, but we should anticipate that. And third, and I'll finish there, there may have implication on the frequency and persistence of relative price changes, notably through seasonal effects and green transition policies. Seasonal effect for energy in both directions, either through higher or lower demand for heating and cooling, may increase divergence in relative prices. And the green transitions may also incentivize factors of production to shift from older to newer sectors, pushing up wages in those newer sectors, with a slower corresponding fall in wages in the older sectors. Think about some of these electric vehicles, think about some of these installation of new devices to produce renewable energies, and how that transition is going to have to take place in relatively short order with scarce resources of skilled labor, whereas at the other end in these old industries, there will be transition to be had, which will be also quite costly. So I will stop here.
Thank you very much.
I'm very keen to have the...
Yeah, no, but why don't we go first to José Luis, and then we'll come back to you, and you will give also the time to answer the question from Christine on the financing, the relationship between the carbon pricing and the transition bond. But I have a very good answer. You do have it. So why don't you go? So why don't you go? Why don't you go? Do you want to? Absolutely.
Okay. So I don't have a very good answer to Christine's question. I haven't looked at the details of the government's plan. But let's say we want zero net emissions by some target date, 2050. Yeah. I'm not sure if the government has calculated what level of carbon taxes is needed to achieve this. It will depend on how efficient investment in green technologies that will be done, hopefully, during the next 10 years will be, among other things. So I don't have a very good answer here. I can't speak for the Japanese government. If I could continue to make a couple of remarks on the issues that have been discussed. I agree with François' point that we would like to keep the inflation target at the current level, even with more frequent physical shocks or risks. But I, of course, worry about what they will do to inflation expectations. As I said, we probably will be introducing carbon tax at a certain point in time in the future, and then we'll start raising it afterwards. So this could have some impact on inflation expectations as well. So we'll have to monitor that carefully. Other things I wanted to say as matters of more short-run nature. Our subsidies for green investment may create some inflationary forces in the short run. But given that underlying inflation in Japan is at the moment below 2%, we could, at least for a while, accommodate these inflationary forces. Beyond a certain point, we'll have to turn to monetary tightening. But then we may decide to continue using this, what is it called, targeted credit policy of funding green investment. I'll stop there.
That's a great point, right? At some point, for countries that have low inflation or that are below, it'll be interesting to see whether there's good inflationary pressures or bad inflationary pressure and what it means for the economy. But that's a great point to come to you, José Luis. Because the Bank of State, Christine mentioned the uncertainty around inflation going forward and also the volatility. The Bank of Spain, you do quite a bit. Can you say, how do you go around this question about uncertainty, volatility, and can we forecast some of the trends that we're likely to see going forward?
It seems to me that climate change and the related energy developments pose central banks the same kind of challenge that the financial crisis created to us, because we realized when the financial crisis in the first decade of the century unfolded, we realized, and it was very, very clear actually, that our toolkit, analytical toolkit, and our predictive models were completely unable to capture the interaction from the financial sector to the real economy and inflation developments. I mean, all the frictions that were created, all the transmission of linkages between the financial sector and the financial instability into the rest of the economy were actually very modeled to a very limited extent in our models. Well, in the same vein, I would say, we are now confronted with a situation whereby we have this climate change, which implies larger and more frequent shocks and in the tail of our distribution on output and inflation. And we need to invest, and actually at the Bank of Spain we are investing actually, for instance, in trying to have models which more explicitly capture the linkages between energy and the rest of the economy in a more structural manner. I think this is very important for forecasting, because we know when we look backwards, and this will be even more clear in the future, that a very important contribution to formation of inflation and inflation volatility stems from shocks, energy shocks, primarily in the past from fossil fuels. I mean, so we need really to understand much better all this. And for that we need, and we are actually, central bank, are investing a great deal on that, but we need more on that. And probably even beyond energy, and this might prove even more challenging over time, you need to try to combine our way of approaching to modeling from those of the climate science. I mean, I very much believe in multidisciplinarity, and here is, although it's a challenge, it's worth really exploring, working together in order to have a better understanding of how these two elements interact in different ways. And I would like to conclude with maybe a more positive note on two elements that I think we haven't still mentioned, but basically show the uncertainty surrounding all that we are discussing. First, I firmly believe in the importance of innovation. And this is a challenge which implies and is really triggering a lot of research and development in order to be able how to deal collectively to these issues. Think for a moment in the pandemic and the innovation on vaccines. I mean, we didn't anticipate such results so rapidly. So it might be the case that looking forward, with all the investments on research and development, on energy, on new technologies, etc., we may have productivity gains that now we are not being able to anticipate. And a second potential but uncertain positive note, primarily thinking from Europe, I would say, think for a moment that although in the transition and I fully agree with François and Christine, that we may have higher inflation and probably lower output, but if the transition is smoother than we expect and more rapid, think for a moment in a world that instead of relying so much on fossil fuels, we are relying far more on electricity as a major source of energy produced with green sources. If this were the case and is more locally produced, some of the sources of uncertainty on inflation will be removed, and we will be more isolated from things that have complicated a great deal our policy. So yes, I leave it here, but I think that there is uncertainty, but the uncertainty doesn't mean negative outcomes, means that outcomes that are unexpected and are very ample in terms of the distribution also entail. Thank you
so much, José Luis. It's clear every risk also brings opportunities, and it's important to also look into the opportunities. We're running out of time, but I have such a distinguished panel here. Is any of you of the panelists who want to make one more remark before we close the panel? Because we've raised so many issues. François, I see your hand. Thank you so much.
Very quickly, 2 comments. First, I couldn't agree more with what José Luis just said about the imperative of intellectual investment and multidisciplinary research. And this is what the NGFS is about. We try to take the physical scenarios by IPCC and translate them into several economic and financial scenarios. It's not easy, but it's absolutely necessary. And second, following what Christine said about supervision, which is of the essence, may I add a note of cautious optimism. This is probably not the best week for optimism on climate change, but I happen to be the longest serving governor in the panel. And in the last 9 years, I'm really impressed by the new tools we have for supervision of climate risk in banks and insurance. We started with disclosure, the snapshot of risk. Then we introduced climate stress tests, and now most jurisdictions are using them. They are not yet perfect, but 6 years ago they were utopia. And now we come to the third tool, which is transition plans. So publish risk, monitor risk in the future, and reduce risk thanks to transition plans. We should really go along this way.
And if I can, I want to endorse François' point, and it shows just from the number of banks that are now complying with the requirements to assess, to go through the test, and to provision the risks. We started off, François, I speak under your control because you do that on the ground, but we had about 25% of banks that were complying essentially. We are now at 80%. And I think this escalation procedure that has taken time and energy and conviction, because it's easier to say, oh no, this is such a bore, why would we have to do that? It's more bureaucracy yet again. No, when things like what happened in Valencia occur, then suddenly you realize that the data, the information, the disclosure, all of that has been critically important. I would like to mention one speech by somebody who's actually sitting on this panel, Andréa. You gave a speech at the London School of Economics a few weeks ago, which was really excellent in that respect. So I hope we all read it.
Thank you very much. So on this, look, what I want to add to this as a closing remarks is I think it's not only the instrument and the hard work that is behind it, and having a coalition of the willing in the NGFS and the moving forward that has really moved forward, and the regulatory requirement. I think what today has shown is the quality of the discussion has also tremendously improved over the last few years. And I think what we have shown here today is the importance to bring these different sectors. This morning we've heard about the role of international trade. We've heard about the real economy. We've had CEOs from hard-to-abate sectors that have really shown and given us a sense of how they think about it. We have thought about innovation, which is a necessary good, but also a challenge. And of course, now we have heard about how important it is for central banking and how they think about it. But I think the point is, it used to be something to discuss from a more ideological perspective, and Christine, you said it now very nicely, it has become now an issue of normal risk-taking perspective. It's a risk management, we have to think about it. So I will stop here. Look, it's been a really wonderful day. I want to stop by just thanking all the speakers we have had today really very high quality. To the program, of course, the panel, and I will end with a big applause to the panel. But before we get there, I do want to also thank the audience. You have been wonderful also in the questions, both in person and, of course, online. And I've said it earlier, I do think the co-organizing teams have done a tremendous work. We would not have been able to do it together. And this time, particularly the Bank of Japan, Koiza's team have been tremendous, the Bank of Spain. Despite all the difficulty in the last few weeks, you have been absolutely stellar. The NGFS Secretariat, as usual, are really big partners, of which we're very happy to be able to rely on. So with this, I will end the Greenspan. Thank you very much.